action.
This is the story of MFS. America was changing rapidly in the 1960s, and so was the investment landscape. Glamour stocks, star fund managers, and high-flying go-go mutual funds fueled a euphoric bull market. Trendy performance funds catering to the short-term speculator were all the rage. Then there was MFS.
Well, when you are an investor, the only way that you can win is to think long-term.
It's why MFS chose to rise above the hype, knowing full well how gravity works. As astronauts walked on the moon in the summer of 1969, the market fell back down to Earth and kept falling. Though MFS avoided the worst effects of the go-go 60s, they did reveal cracks in its foundation.
I have characterized the creation of Mass Investors as having been cursed a little bit by the first mover disadvantage.
The firm needed more flexibility to innovate, create new products, and give analysts the chance to work on additional portfolios than its original trusteeship structure could offer.
So that was a problem in the making.
In 1969, the firm reorganized, officially becoming Massachusetts Financial Services Incorporated. A new generation of MFS analysts and an explosion of additional funds were about to redefine what active management meant for decades to come.
We knew that if we did it right and we hired the right people and put them in the right place and trained young people and inculcated them in our culture, in our value system and supported them, eventually we would end up with a platform that would be very unique in the industry and provide great results for our clients and shareholders.
The long bear market brought inflation and high interest rates, but also opportunities to create value. In 1970, MFS hired Keith Brodkin to lead its new fixed income group. Brodkin then recruited Pete Laird and another former colleague from New England Life Insurance Company, Pat Zlotin. A bold move when women were rarely seen in the investment world.
When he started MFS, they didn't have anybody doing fixed income. And so they had this little office with his desk. And so he called me, he said, can you come over and work here? So I said, sure, why not?
That little office was about to do big things. Brodkin was a visionary, rejecting the conventional wisdom that bonds were simply buy and hold securities. Zlotin brought the math and expertise and rigor. Together, they helped pioneer the field of active bond management, helping everyday investors pursue enhanced returns during the turbulent 1970s.
So MFS was an innovator right then. Not only did they start the first mutual fund, of course, but they also then innovated by starting fixed income. And I think people forget that some of the things that MFS was doing at this time were not common practice.
One of these uncommon practices was trading bonds of similar quality and maturities at slightly different prices to improve capital appreciation for shareholders. This was a big departure from just buying bonds and passively holding them until maturity. The fixed income team kept its focus on long-term value, which sparked a full-blown fixed income revolution, expanding the firm's reputation from that of an old-line equity firm into that of an innovative bond shop. MFS's reputation for generating alpha responsibly was anchored by a risk-aware culture. Because MFS selected bonds based on the financial strength of a company, the firm needed to know that company inside and out. When MFS hired Joan Batchelder in 1978 to oversee its new high-yield bond fund, she built a framework for security selection and managing credit exposures. Batchelder's risk management processes remain today, along with the culture of collaboration she fostered and the ladders she created for other women to climb.
People really today, again, it's the big thing to talk to a woman who's in a leadership role, and I have to say, it's hard for people to believe, but I never thought of the distinction at MFS. It never presented itself because I had other strong women leaders to look up to.
By the late 1980s, MFS had evolved into one of the premier active managers in the U.S. It was time for the firm to stretch its wings. MFS followed clients across borders, first to Latin America and then to Europe, and found new investment opportunities along the way.
The investment management side of the firm was also putting
their first analyst, David Antonelli, outside. And so this non-US, this focus on the borders outside of the United States started to emerge.
The successful launch of the Meridian Funds kicked off MFS's global expansion efforts, but it was a young analyst, Dave Antonelli, who planted the seed that would grow into MFS's global research platform.
As we sat down and thought about how might we build out an investment network around the world, from the very outset, we approached it that we wanted it to be a global network where everyone worked together and marched to the same sheet of music, rather than a whole collection of sort of regional offices and regional teams.
The London office became the Singapore office, became the Tokyo office, became other Asian offices, and Dave has been called by yours truly and others the architect of the global research platform, and I believe that that's the case.
With each global office MFS opened, the more local market perspectives it gained. MFS was unleashing information flows not just across the firm, but also across sectors, geographies, and asset classes.
Here we are in this office in London. All the competitors, the peers, the clients, everyone is just minutes away. And that's great because this proximity allows us for that transfer of knowledge, allows us to network and allows us to also have fun, build those long-lasting relationships.
Bringing in those perspectives from different regions, in particular sort of a non-Bostonian view, is really, really important and often actually helps strengthen and enhance how we have our corporate policy, even for those still based in the US.
By the late 1990s, MFS was becoming a truly global firm. Being active took MFS around the world to find the best investments. Taking the long view helped MFS build a global presence in an integrated way that benefited shareholders. As Y2K and its unknowns approached, MFS was confident in its ability to navigate the complexities of the 21st century. The question was, what's next?